The Gulf Coast Growth Show is sponsored by Chevron Pasadena Refinery and is an extension of the Economic Alliance Houston Port Region, where our mission is to market and grow a vibrant regional economy. Okay, hey guys, and welcome back to the Gulf Coast Growth Show. I'm your host, Jason Lee. My co-host, Zeke Smith, is out on this episode, but I'm actually here with my good friend and a phenomenal member of the Economic Alliance, my friend Steve Cote. He is a risk advisor and also the senior vice president at Brady, Chapman, Holland Associates. Steve, great to have you on here.
Thank you so much. Glad to be here. It's exciting to be invited to come on the podcast, the infamous podcast.
I was thinking, on my drive back from lunch to meet you over here, I was thinking, I think we're over 130 episodes, 5 years in. So good. And I'm asking myself, how has it been this long that I haven't had Steve on the show? So,
well, we did do it actually on Zoom.
Yeah, that was years ago.
And that's what I mean. It was COVID. We did some stuff on the Economic Development Corporation.
Oh, yeah.
And so, but yeah, I mean, when you think back to doing stuff during COVID, it seems like ages ago.
Yeah, exactly. You forget that. And then and then really, we've never talked about what you do.
Yeah.
And I think today's episode, because I don't know, the reason I reached out is because one thing that I've seen consistently is insurance is shifting. Yeah. We're seeing a major shift in cost. We're seeing a major shift in number of issues that are taking place Florida's starting to people are leaving Florida, no longer insuring in the state, right? Yep. So there's just and that's going to impact the national rates and things like that.
Absolutely.
So we're all feeling that pain. And so we're going to talk a little bit about that, what's happening, what you see, and then also risk management, right? How do you treat insurance not like a thorn in your side? I think sometimes people treat it like a thorn. I got to pay for my insurance this year. But how do you, especially in business, understand the concept of risk mitigation, management? And I think you really specialize in that, not just call me and give me a quote, but it's really how do you guys step in and actually help a business owner or entrepreneur understand how to establish a solid risk plan so that they're not having to pay higher premiums down the road, right?
Absolutely.
And so let's start with that. So first of all, why don't you tell us a little bit about your background and how you got into the space and a little bit about Brady Chapman. You guys are celebrating this month, I think.
40 years in August that Brady Chapman Holland been in existence. Wow. Tim Brady and Ed Chapman are still dabbling within the company, but both for the most part retired. And so, it's wonderful. They've done a fantastic job, and it was good to celebrate with them just last night from that standpoint.
Oh, wait, great.
But so I got into insurance. I've been with Brady Chapman now 16 years. I've been in insurance roughly about 20.
Wow.
Started with a good local guy, Ken Phelps, State Farm Insurance over here. Got approved to be a State Farm agent, and but wasn't really my calling. My calling was commercial insurance. My calling was working with business owners. I grew up in a family-owned business when my parents had a donut shop in Deer Park, Bosa Donuts. They had that for 30 years growing up. And so something near and dear to me was working with business owners, seeing my dad, deal with things and all that. I recognized as I got into insurance, I said, you know what, that's the area that I feel most comfortable in wanting to help people from that perspective. And so so a lot of clients that I work with are a bit high risk, oil and gas, a lot of construction, different things like that, where they need a plan, just like you were more or less talking about. Insurance is just, one component of risk management. And so, you hit the nail on the head from the standpoint that there's, I look at 5 ways to manage risk and, and it's either reactive or proactive. And insurance is just very reactive when you think about it. I mean, and so I always pull back and start to, and I'm talking to somebody and I say, look, think of what insurance is. It is literally just a spread of risk.
Right.
If we look at it in the terms of basically somebody that buys a home or buys a business, let's just say it's worth $100,000 and they assume that. So the most expensive thing when you assume risk is you assume everything.
Right.
So the next step to take in managing risk is, can I finance some of this? Can I get some of this off of me? So an insurance company basically becomes a conduit to helping you spread that risk. So if you've got a $100,000 home or business, let's just say, and the insurance company says, pay me $10,000 and I'll cover you for that. The insurance company then goes out and gets 9 more clients.
Right.
And now if the average is that they, lose a home, fire once a year, then he's broken even. And all the people the business owners or the homeowners are covered, and the insurance company has broken even. But the caveat that you're looking at, because everybody looks at it just like you were saying, it's a thorn in my side. The insurance company's out to get me. They're just trying to make a profit. They're trying to be a conduit. You're trying to run your business. You're trying to leverage their ability to spread your risk so that you don't have to assume the entire value of their business.
Right.
And if both of those things are right, if the insurance company picks well and they stay below average of the potential losses, they win, you win. But if they pick wrong, it's going to cost everybody more and more money.
Right.
And so I would tell you the 2 biggest areas of challenges right now for businesses is property insurance and automobile insurance.
Okay.
And so I'll break them both down in 2 different ways because they're 2 different type of things. But right now in the world of property insurance, and I even brought some notes here for statistics. But if you go on climate.gov, the NOAA, National Oceanic, whatever the AA stands for, you go on there statistically and you look, so let's talk about disasters and events that are happening. From 1980 to 2010, on average, there was 5 events that cost $1 billion or more per year. Okay. So you look at that, and that's just US. So for those 30 years, on average, you got 5 of those events that happen.
Right.
The last 12 years, since 2010 to 22, it's 16 events per year costing more than $1 billion.
My God.
So you're talking 3 times more in the number of events. So just like I was saying earlier, when the insurance company's picking 10 companies and saying, okay, if one burns down a year, then the average is I need 10 clients to break even. But if now the average moves up to 3 or 4 times a year a home burns down, now he's got to go out and get 10, 20, 30 more clients just to break even.
Right.
So that's an issue. The second thing that is starting to become a bit of an interesting thing is location. You're always been told, rumor has it, if you live a little bit closer to the coast, or if your business is a little bit closer to the coast or the Gulf, insurance is going to cost more. You're susceptible to hurricanes. Well, nowadays, you've got a lot more issues with wildfires. You got a lot more issues with tornadoes and floods in the Midwest, different things like that. And so these insurance companies, these conduits, they're spreading the risk all across the country. But now, if you're going from 5 events of $1 billion or more a year to 16, now they're getting hit in other areas as well. And so location almost isn't as crucial because everybody's getting hit. Right. And so it's costing more. So if you look, so that's something that, is something worth looking at. But the other component that I think is very important is that's happening just in the last 3 years. Since 2020, I was watching CNBC. They were doing a whole report on insurance. 34% cost increase in material to rebuild for building construction. Wow. 27% increase in labor. So on average, since 2020, you're talking about a 30% increase to rebuild, whether it's your home or your building or whatever the case may be. And that's not even factoring in if you're having more events and more disasters and your insurance company's raising rate. If that rate is going up 10% and your cost of construction is going up 30%. So if your building's $1 million, now you've got to insure it for $1.3 million.
Right.
So that's a 30%
Well, that was
increase.
one of my questions is that $1 billion, those 16 events that are above $1 billion, well, if the cost of building has gone up by 30%, is that billion comprised of the cost of the construction?
Yeah, it's all
so that billion.
Well, it's all factoring in.
Yeah, it factors in that. So,
absolutely.
So it's not just that there's more events of the size and magnitude. It's the actual cost of what they fix. So,
well, yeah.
Or is it, and then also more events. So it's kind of a compounding effect.
Well, and then
there's more stuff going on, but also it's more expensive to build. So hence the compounding effect of issue.
Exactly, 100%. Okay. So it's all, and it's just a compounding factor on top of all that.
Just keeps on happening.
Yeah, because you got to think over the 30 years from 1980 to 2010, the 5 events they averaged a year may have just barely crested $1 billion.
Right.
But nowadays, I mean, you could have the Hurricane Ian that just went through Florida last year, right in November, $70 billion. You probably go back in those 30 years from 80 to 2010, there probably wasn't anything to hit $70 billion.
Right.
So now not only, they over $1 billion, but, you can then go dive into how much of a multiple above $1 billion they are, how many billions of dollars more they are. So the other crazy thing about the property market too, and you think about it and you'll see it on, like we just had our legislative session in the state of Texas. Legislators, have the ability written into their state laws is that they can regulate how much an insurance company can raise the rates. They can stop them from raising rates from a certain amount. Well, and you look at it, and I've served in politics, and and you think to yourself, okay, well, the politicians come out and say, hey, I'm on behalf of my constituents, and I don't want them to be hurt financially too much, and the big bad insurance company. And by all means, I'm not an advocate for just the insurance companies. But, what is capitalism? What is a circumstance where when you start losing money in whatever it is you're doing, and costs have to go up, they're going to go up. But here's the key, though. What can compound that is if the legislator says, hey, you can't raise your rates more than 5%, period. Sometimes they can make that work, depending on how much spread of risk they have in the panhandle or wherever versus the coast. But if they can't, their alternative is get out of the state.
Right.
Pull out altogether. California alone, with the wildfires and the state legislation that's blocking them from increase, State Farm and Allstate are pulling out of California.
It's crazy to think about.
Yeah. So if that's the case, what is the constituents, what are the business owners and the homeowners able to do? You got less competitors offering you insurance. Rates are going to go skyrocket at that point because you're just not going to have the options available to you. So it's a really challenging issue for the property market, but that's where a lot of businesses are seeing 10, 20% rate increases, then 20, 30% increases in valuation. All of a sudden you come along a new year and you can be paying 50% more in insurance costs for just your property.
Wow.
So that's a big challenge, but that's something to be paying attention to. And
so I guess the next question is there anything that can be done? I mean, what can change, or are we just facing the music of the reality of
I mean, there's some of that, and a lot of people will say, well, hey, my property's my property. If it's located, along the Houston Ship Channel and that's a high risk area, there's nothing I can do. There are some things you can do, because just like I was saying earlier, if you're looking at 5 ways to manage risk, 1, you assume, most expensive, 2, you finance. But let's look at how do you prevent, mitigate, and transfer risk. So if you're looking at, for example, property to prevent, what does your annual maintenance look like? Do you have anybody that inspects your roof on a regular basis? Do you have a maintenance crew, whether it's in-house or a third party, come out and refasten all your flashing around your building and put a report together that you give to whoever it is your risk advisor is to help on behalf of you negotiating those terms? Did you update your windows and put hurricane resistant windows? Did you move your computer system terminals and all your servers to the cloud and get rid of all that exposure?
Oh, wow. Yeah.
Those kind of different things. So that's a way to prevent. Now, things happen. So when they happen, how do I mitigate? How do I make it less of a loss? Well, then you can essentially understand what's my disaster plan? How do I prepare? How is everybody trained so that when a storm is coming or something happens, we all know what to do, batten down the hatchets and move vehicles out of the way, or move, put board up the windows, those kind of different things. What's our business continuity plan to get ourselves back up and running? That's a good way to mitigate. And then how do you transfer risk? Well, in some cases, maybe you don't own property along the coast. Maybe you move your facilities more inland or someplace where there's not as much of incidents or issues, or maybe, and then you lease from that standpoint for those reasons, or, there's different dynamics from that standpoint. That's a good way to transfer risk in terms of not essentially owning it and getting out of that business of from that standpoint. So, yeah.
So let's talk about, and I think you just hit on a few of these things, but you kind of gave us an idea as to what's happened, why we're at where we're at now. I know I've been hearing a lot of it and I've been feeling it personally, right?
Yeah.
Like, I mean, I just got a house this year and I had to buy more insurance, and there's a definite difference between what I was currently paying it just foretold me what I'm going to have to pay on my house now. I'm renting out now because I'm like, oh crap, I'm going to have to pay that bill because mine was significantly higher in my new home. But it's passed on to the commercial side. So you talked a little bit about things you can do from a mitigation perspective, but how can business owners take a more proactive approach to mitigating risk, or really to, I guess, how do they change their mindset to view this so it's not such a painful pill when it comes to taking, just dealing with insurance in their business?
Well, from a business owner standpoint, you think about it. What are you trying to do? You're trying to make yourself look more attractive to the insurance marketplace. You want to handle some direct costs there. You want to make yourself more attractive to your employees. They want to know they're working for a good, safe company, takes care of a lot of different things. And you want to look more attractive to your clients, that, your guys have the right equipment and you have a good place and everything and good fleet of vehicles and those kind of different things. And so, like I was saying earlier, insurance is a reactive tool. It is just a product. You get a good assessment of what the operation of the company does, and you write an insurance policy to offset everything that's insurable and set that policy. And then you just wait for something bad to happen. Mm-hmm. So the real question then is, just like I was saying earlier, what are the proactive steps that you can do? How do I prevent something from happening? If outside of property, you're talking auto, what's my fleet safety training look like? Do I need to work with behavioral based training for my employees that are driving vehicles on the road by putting a GPS device into the vehicle, letting them know, hey, this is going to record how fast you go, how hard you stop, how fast you accelerate, all these different things. And all of a sudden they're suddenly driving a lot better because they know they're being monitored very well. Right. So that's a way of preventing something from happening. You're being proactive. You're doing something with your policy and procedures. To mitigate something like that, it's, training them for accident investigation, gathering the right information to be able to offset a lawsuit coming against you from that standpoint, or transfer, if we're talking auto, hire a motor carrier company to haul the goods instead of you doing it. Get out from under that risk. Hire a subcontractor to do it from that perspective. And so you're essentially, doing something proactive. But, and to get started on something like that, go out and get a good referral from somebody that understands the world of risk. Have them come in, do an assessment of your company, understand all the resources they have internally. What are the resources you need, whether it's personnel, a strong safety person, what kind of contracts are you assuming? A lot of companies in the industry deal with EMRs, all that kind of stuff. Somebody can go out and do a whole property assessment of your property or something. Come back and give you a report, a good assessment on all these different exposures to risk. Explain to you what's insurable, because then you can put that on the insurance policy, but then what's not. What's policy and procedures, and what kind of things do you have to do to best manage that? So that's the recommendation for sure, is find yourself somebody that can help you with that.
Now, should this be is for the most part, should it be their commercial insurance broker or their consulting firms, or who do you
it could be a lot of different things.
If you're trying to do this?
If you're a good mid-sized company, anywhere from $10 million to $200 million, company, your insurance agent should very much be able to do that. You're already paying them,
right?
To manage the insurance policy. And so if you're already paying them commission and dollars there, I say go there first.
Okay, gotcha.
Draw that experience from them that they have and utilize that, because then it shouldn't cost you anything more from that perspective. Okay. As
most insurance advisors or brokers, if they're in this space, should be doing this, and if they're not, then you probably need to push a little harder.
Exactly. Yeah, and some are set up to be just transactional. Here's your insurance policy, here's your certificates, here's that. But others,
I think a lot of people do that, right? Because people price shop, right?
Yep.
I know from a personal perspective, and I tell my wife this, I don't. I've had people call me and try to sell me cheaper insurance, but I always say, no, I go with my insurance guy.
Yep.
Because I think I'm paying the best value, because I entrust him to give me all the right things. Right.
You want your advocate.
I want the guy that I know is fighting for me to get the best rate, but also make sure I have the appropriate coverage for my family, because I've made that mistake where I went cheap on insurance and then something happened.
Gaps in coverage.
And then I had the gap in coverage, and then I had to eat that. And I only had to do that once to go, okay, I'm never going to do that. I'm going to hire a guy who I could trust that's going to put me in the right stuff and not just try to price shop me.
Yeah.
So,
and there's a good perspective of looking at it too. They can either be a vendor, which is somebody you go to after everything has happened. Hey, go get me a quote, go shop me, go do whatever. Or they can be an advisor,
right,
which you go to before anything happens. And you say, hey, I'm thinking about doing this. What was your advice and counsel? Hey, I want to, get into this line of business. I currently obviously do this. Now I want to do something else. That's when you're going to somebody prior to that, they're an advisor to you.
Understood.
If they're a vendor, they're just transactional. Let me just, give me a quote and let's move on. And there's companies that are set up, but if you're a high risk company, absolutely you're looking for advisor. You're looking for somebody that is definitely giving you the plan and resources you need to manage that risk.
Understood. Yeah. Yep. And I think that's probably what I've observed in my time working with business owners, and I know you've worked with a ton as well, is I think sometimes everybody's got to experience enough pain through a deal before they start seeing things differently.
Yep.
And I've seen the difference in most business owners too, right? So if you're listening to this, you're a business owner, you haven't had the pain yet of that. Trust me, it's not a matter of if, it's just a matter of when.
Yeah.
Because everyone's gonna experience it. So
I know I've got teenage girls, and you tell them something, and until they finally stub their toe, they're like, "Oh yeah, Dad, that's what you were talking about."
That's what you're talking about. So it's the same concept here, right? We want to make sure that whenever you approach risk or anything, get an advisor over a vendor. There's certain 100%. Things that you can put out from a vending perspective, right? That makes sense to have a vending. It's a transaction.
Sure.
When it comes to risk, not a transaction.
Yeah, absolutely.
This is an actual thing that requires counsel, direction, understanding the markets, and then
understanding that business, that line of work,
your business, and is going to dive into it. So, high encouragement for those listening that they would take that type of action. Well, look, as we get kind of close to wrapping up, I just wanted to, we've always been a big fan of yours here at the organization. You've been a great contributor to, just the region in and of itself. I know you've served in several roles here. Is there anybody that you think you'd want to highlight or recognize that kind of impacted you and had an influence on you?
I'll tell you what, there is somebody, and a lot of people know him from the communities. He's retired, but his name still stands in a lot of different areas. Ben Metter, a longtime friend and neighbor of mine, and a longtime, promoter of the community. He's served in boards and he's chaired a lot of committees and positions throughout. And so growing up and living about 20 years across the street from him, I got to know him, especially as I started doing more work here locally and everything. And he was a huge advocate about taking care of where you live, getting involved and supporting everything, whether it's your church, whether it's the Economic Alliance Houston Port Region, which was originally started as SEED, which I think he was involved with in the very beginning, whether it's the Education Foundation for your school district, you name it, those different things, Chamber of Commerce, and even the city. So with that, I took a lot of his advice, and he was a great mentor and somebody to guide those principles by. And so had the great opportunity to serve on city council and some of those different associations like he did. And it's a huge reward to be able to see, the continued growth and development of the community, and that you can be a part of it, because, we're here, we're living here, we're raising our families, we're growing our businesses here and things like that. And so I'm very thankful for him, coaching me and guiding me on that, and happy to try and do the best I can to represent him as well too. And whenever I can, when I've served on boards after him.
Fantastic. Well, so yeah, the name's very familiar. That's a big name here in our region, and a great representation of that. And I think you've taken that torch and ran it extremely well here in the area. You're a shining example for me and have been a mentor for myself, and just a great example. And people see you serving, and then that's really what you lead with. Business comes second to me. When I think of you, I think of a guy who goes out and tries to serve and add value, and then by that process, business comes, but is more centered on that kind of thing. Yeah. So thanks for being a testament to that. And as we get ready to wrap up, I want to thank you for your time today. Great insight. I think this is a tactical, sometimes our podcasts are information, sometimes our podcasts are designed to hey, take this and do something with it. This is one of those episodes that you need to take and do something with, because when it comes to looking and analyzing your risk for this year, take a proactive approach. Um, Even if let's say you don't mitigate the cost, maybe you maybe you make some expenses that reduce your risk and bring down the cost of your insurance. You might net neutral, but you're still at less risk.
Yeah,
and
100%.
so there's something to be said for evading the risk versus just covering it up by having insurance. And so if you can get out in front of it, get yourself an advisor, not a vendor, to help support you with that. If anybody does have any questions and wants to reach out to you, Steve, what's the best way for them to reach you?
And you can go on our website at bch-insurance.com. Happy to help from that perspective. Call me. I mean, the Alliance has my contact information.
Okay,
So
fantastic.
Yeah.
So people can reach out to the Economic Alliance and track them down. You can reach out to me through LinkedIn. I'm happy to connect you with my old buddy here. So we'll make it happen. Guys, from the show perspective, one thing that Steve really hit on is community. And I want to just encourage you too. If you're listening to the show, you're watching it today. He's an example of it, but he mentioned Ben Metter, and really this organization embodies that as a way that people who I've seen that have thrived, whether they're at the top of the food chain of an organization, or they're just in sales in an organization, or they're an entrepreneur like yourself and they run their own business in insurance, or commercial real estate, whatever the product is. One thing that is consistent is the people that I typically see shining are the ones that I see involved. So if you're a member, but you haven't really plugged in, meaning you stroke your check and you maybe sponsor a few events, but you really haven't dove in to figure out how you can get involved, I would encourage you to get involved, whether it's through the Economic Alliance or some other body or organization in your backyard. This is where your kids go to school. This is where your family lives. This is where things are going to impact you. So don't just sit on the sidelines. Get out of the seats. Get on the field. Go out and make a difference. And whether it impacts your business or not, it's going to impact you as a person. It's going to impact your family. So
100%.
great call out on that earlier, and a great part of our show. So we want to thank you for tuning in. We're always excited to have you guys join us. Again, Steve Cote from Brady, Chapman, Holland and Associates today. And you can always check in with myself or Zeke on LinkedIn. If you have any information, want to give us some feedback on our shows, or recommend anybody to come join us on the show, we'd love to hear from you. And then again, you can follow us at Economic Alliance Houston Port Region. You can go to the website and subscribe to any of our channels, and make sure you pay this forward by sending it off to somebody who needs to hear it. We appreciate you, and we'll see you guys next week.
Thank you.
Thanks for tuning in, and be sure to go to the Economic Alliance Houston Port Region website and subscribe to our channels. And let's pay it forward by sharing the good news of what's happening in our region by passing this episode to somebody you know.